Hi, it's Michael Farr from Farr, Miller and Washington. Happy Memorial Day weekend. It's Friday the 23rd, and as I look at markets this morning, things look okay. The Dow Jones Industrial Average this morning is trading around 16,588. That's 150 points off of its all-time high. The S&P 500 is at 1895, just 7 points away from its all-time high. Bonds are rallying, and therefore the yields are falling to a 2.53%. Interest rates are very low. Across the board, things look okay. Oil still a little expensive at $104 a barrel, and markets have been going back and forth, kind of fearful and treading water and shredding nerves in the process. What does it mean, and what do we take from it? Well, we have a piece of economic data this morning, which is new home sales. New home sales came in up 6.4%. For the first time in 3 months, new home sales in the U.S. started to increase. This was credited largely to lower interest rates. I told you we were at 2.53% on the 10-year. We had been creeping up to 2.8, and we'd come back. When interest rates went up, as they did a year ago, it was just a year ago when Chairman Bernanke started talking about the taper, and the yield on the 10-year Treasury went from about 1.7% to over 3%. Mortgage rates went up, refinancings on mortgages dried up and went away, the volume went away, the dollar amounts went away. Mortgage originations dried up as well. Our case for markets and for the economy is that we remain very dependent on a low interest rate environment. It is crucial to keeping the economy going, which means the Fed is going to stay involved for a lot longer, it seems, as necessary in order to keep these rates low. As we've gone sideways since December, we had a 32% gain on the S&P 500 in 2013. Markets have essentially gone sideways now through the end of May. What does that mean? People say, are you concerned, Michael, about that? No, I'm kind of delighted, frankly. I'm an old school type of investor. And you see a 32% run up in markets, and then you get to go sideways for a while. And while you go sideways, corporate America's adding to balance sheets. Earnings are increasing. Fundamentals at these companies are able to improve, and thereby, as stock prices have gone up like this and the fundamentals and then sideways, fundamentals now grow to support the valuations of those stock prices. So an old school guy like me thinks that that's not a bad thing at all. We could go sideways for a while and drift higher. I don't see any cataclysm coming for stocks. I think that you have to be disciplined and calm through markets like this. So let's add 2 more rules. Let's add Farr's rules. Buy low, sell high, be disciplined and calm, because there's a lot of room and a lot of time between the buying low and the selling high where you're tempted to do a lot of things that you shouldn't. Remain calm, remain disciplined. If we can help you, give us a call at Farr, Miller and Washington. Enjoy this Memorial Day weekend. I hope that this unofficial start to summer is a great one for you and for your families, that they are safe and healthy and happy. In Washington, D.C., I'm Michael Farr.